Good morning. Welcome to this weekly market update from TreasuryONE, presented by myself, Wichard and Andre. Andre, we've always had volatility in the markets. Now we've got some volatility in the weather down in Cape Town. I see up here in Gauteng it's raining, it's wet, it's cold. So all this volatility in the markets. We've seen US non-farm payrolls come out last week, better than expected. What's your take on this?
Yes, thank you, Wichard, and good morning and good day to everybody. Yes, if we speak about the weather, then mostly damaged by strong winds. And if we pull that through to the markets, then this week could be the week of a strong surge in winds that could influence markets as well. There is a surge in the payrolls. Once again, they're creating jobs, but I think we've spoken about money flowing to the military sector, manufacturing in America because of all their exports and assistance that they're aiding countries with in their wars. But the money being spent in America, obviously jobs needed for that, and those jobs are still created. And if we look at the graph, then we see from March through to March this year, March last year to this year, a very consistent pattern. Few months was a little bit lower, but mostly, especially the last 3 months, that little graph is pointing a little upwards. And that assists Mr. Powell in keeping his interest rates where they are. Still hitting the banjo on the higher rhetoric of interest rates for longer because they need to see inflation lower. Maybe there is some light in the end of the tunnel. And if we look at the next graph, then we see that the hourly earnings is growing a little bit slower. Yes, it's still above inflation, but when you calculate an inflation rate, then labor comes in as part of that calculation. So if you have a slowing in that earnings growth, then it will have a positive effect on inflation, and that could assist the inflation rate turning slightly and going lower. There is some negatives as well. We didn't put that on a graph because we've spoken about this before, but there is still an elevated oil price, which means that your fuel prices is higher, your shipping prices is higher, which does have an impact on product cost. So that could again be slightly negative, countering this slower growth earnings. But we are seeing the inflation rate being released later this week on Wednesday. On Thursday, we have the PPI that comes out. Now, if we look at the inflation graph, then we can clearly see that there was a slight upward tick in it over the last 2 months. That's concerning. So I've now mentioned the wage situation that could affect positively. But as I've just mentioned as well, shipping, fuel, etc., could again be slightly negative. But on Thursday, we also have the PPI coming out. And at the same time on Wednesday, we have the Federal Reserve minutes of their last meeting, which is always a little bit revealing in what one can expect going forward from the Fed. Let's remember that we did have last week from Minneapolis, the Fed president from the Minneapolis state did mention that if inflation stays where it is and does not turn lower, it could mean that they leave interest rates for the whole year where it is. So let's see what that minute says about how the rest of all those states feel in terms of their representation on the Federal Reserve Bank. So interesting things for this week, and hence I'm saying there is some winds that can be blowing, and it could blow the currency in a different direction. Currently, we're in a trajectory of a little bit stronger. And if we look at the graph, then we see that the rand is broken the 100 and 200 day moving average. And if we look at the movement of the rand after last week's Fed president from Minneapolis' comments, we did see the rand jumping up quite considerably after it reached the 1860 levels. And in spite of that, we are seeing the rand, as I look at my screen now, just revolving around the 1860 level. So the rand is showing us some resilience, and I would say that that is linked to this trading below the 100 and 200 day moving averages. So it becomes a bit of a technical one. And if we see some positiveness from inflation this week, if the Fed president of the minutes from the Federal Reserve comes out with not too many surprises and the PPI stays intact, I would not be surprised to see the rand trading closer to the 1850 level. The 1850 level being a very, very strong level. If that breaks, then technically we could see it lower. But for the moment, the rand remains very, very resilient and comfortable in its trading range of 1820 to 1920. And I think we could narrow that to 1850 and 19. And I'm very happy that it will remain within those.
Andre, thanks so much for your summary there. The other thing we just need to, that supports the currency as well, is obviously the gold price that's still at all-time highs at 2,350 that we saw this morning. So obviously we just need to keep a close eye on what's happening in the gold market as well. There's just rumors, it's all just India and China and their central banks just buying up gold for encounter to inflation out of the US. So, but yeah, thanks for the summary and thanks for everybody for listening. We'll see you back next week. Bye-bye.
Thank you very much, Wichard. Enjoy your day.